Welcome back to Open Exchange West Africa. Just before we take a look at the West African market, a quick look at Nigeria's latest inflation numbers for the month of July. July year-on-year inflation rose to 8.7% from 8.4% in June, despite the central bank's tight monetary policy. Now, the rise is linked to an increase in composite food index, which inched up year-on-year to 10% compared to 9.6% in the previous month, while non-food index rose to 6.6% from 5.5% in June. Now, although changes in headline index remain in single digits for the 7th consecutive month, we'll review how this could impact on the economy and outlook for inflation as we go further into the year. Usoro Essien, Head Economic Intelligence and Strategy at Associated Discount House, joins me now online. Thank you so much, Usoro, for joining us. Hello, sir. Thank you for joining us. Let's take a look at the latest inflation numbers for the month of July. This time, the numbers came in at 8.7% from 8.4%. Just quickly talk us through what we can read from these numbers.
Basically, the inflation figures have... Basically, the inflation figures have been in line with our projections for about 7 months now. 8.7 mirrored our weighted index. What you can actually see is, because it's a year-on-year measure, the effects of the core inflation last year, and which are basically the cost of reforms, is what we're seeing coming into play. As we've said earlier on, going forward, you expect single-digit inflation below the 9% levels for the rest of the year. However, because of the low figures we're getting, we've gotten very low figures for inflation, and that will translate to a higher level of core and food inflation next year.
Now, we seem to be looking at higher food prices month on month, although we have seen a trickle of newly harvested crops into the market, particularly yam tubers, but it looks like there seems to be a problem with the supply chain.
Well, you can remember there was flooding last year, and that resulted in lower levels of inventories, and that's the stored up food we had. So if the supply to market from inventories reduces, what happens is you would have to pay a slightly higher price for the available stock. As you said, the harvest period has just started, so we're just seeing a trickle in, and that has not also lifted the lacking supply of that commodity.
So when could we see an improvement, as it were, going forward?
Mid Q4, precisely November. And you would see it reflect on the inflation figures. They would actually still trend down. We feel that inflation should actually go to as low as 8% by December year end. Yeah.
Okay, so now going forward, okay, if you say 8.4% for November.
No, 8.0.
8%. So could we actually be looking at 7% before the year wraps up?
No, that's the problem. That's what I tried to explain. You know, it's a year-on-year change. Okay. So from January next year, what you're going to be using as the base for January is the January 2013. So apart from January, for the months that had pretty low CPI figures this year, you're going to see a reflective high figure, but not as high as we had in 2012. 2014, you'll probably be seeing just above double digit.
Okay, now take into consideration the next MPC meeting. How much of this will members take into consideration? I mean, obviously the central bank continues to fight inflation and has succeeded in keeping it below, or at least in single-digit territory. So, looking at these figures, how do you think the MPC will react to it?
Well, I'll maintain my stance in the fact that there's no room for easing this year. The inflation figures are very encouraging, and you would believe they'll tend to want to ease with these kind of figures. However, the tailwinds from liquidity are still there, and with government spending bound to reduce early next year, even at Q4 this year, you don't see any room for easing. I actually feel there's a slight possibility of acting on the CRL if the CBN sees excess liquidity still coming. Yeah.
All right, thank you so much, Usoro, for sharing your thoughts with us on Nigeria's latest inflation numbers. Usoro is Senior Head Economic Intelligence and Strategy at Associated Discount House, looking at Nigeria's inflation numbers, which have come in at 8.7% for the month of July from 8.4% previously. That's a 0.3% hike in that rate.